Hello, I'm Rashawn Levin with Keller Williams Realty. So I want to go over the actual loan estimate statement that you have. So when you actually start in your loan process, you'll get a loan estimate. And then what the final document is going to be called your final closing disclosure document. So you'll get this document when you initially start the loan process. And this document will come from your lender. So this document, just for full disclosure, this is just a sample. This is not a real person. This is from the CFPB. So they have the date that this estimate was issued at the top here. The applicants, so this is Michael Jones and Mary Stone. This address is where they currently live here at 123 Anywhere Street. And the property address, you want to make sure that these property addresses are different, especially if you're refinancing, then no, but if you're purchasing a house, then yes, those addresses need to be different. And make sure it's for the property that you intend to purchase or refinance or get the loan on, basically. The sales price, and on the other side, it talks about your loan terms. Well, how many years is it? So in this case, it's a 30-year loan. The purpose is a purchase. If it was for a refinance, it was a refinance there. The type of loan product it is for a fixed interest rate. Loan type. So if it's conventional, it would be checked. In this case, it is. If it was an FHA loan, that would be checked. If it was a VA loan, that would be checked. In another box, it would be other. So that would be USDA or another type of loan. And your loan ID is going to be your loan number. Rate lock, it may have this on here, it may not, but it should tell you how long the interest rate is going to be locked until. And so this is the next section. So these are your loan terms. So this is the loan amount, so 162 in this case. And then these questions here on this side, can this amount increase after closing? So in this case, no. Interest rate 3.875%. Can it increase after closing? No. Monthly principal and interest. So that's only principal and interest. It does not include taxes and insurance. So in this case, it's $761.78. Can it increase over time? No. Is there a prepayment penalty? In this case, yes. It'll tell you here. If it's not, then it would be no here. Is there a balloon payment? No. If it was, it would tell you. So they tell you the projected payments over time. So with principal and interest, 1 to 7 years, then they go from 8 to 30, and they talk about mortgage insurance and then your estimated escrow, and they tell you the difference of your estimated payment. In this case, since mortgage insurance is going to drop off after year 8, then the payment is going to go down. But of course, if taxes go up, then the payment would go up. So estimated taxes and insurance and assessments. So all of this estimate includes property taxes, homeowners insurance, or other. That would be here. So this is an extra $206. So this is the monthly payment before. So this is the breakdown of where the $206 came from the estimated escrow. So then the next section is cost at closing, estimated closing costs. How much is this? So they tell you the total here, and then the next page, it details where those fees actually came from. And then the estimated cash to close is here. So now we go to the next page. So closing cost details. So the first section is the loan costs. So we'll go in alphabetical order so it'll make sense. So loan cost, origination charges. Then these are services you cannot shop for because those are for the lender. Those are basically services that the lender has in their arsenal, the lender that you chose or broker that you chose. So you can't choose these items, they choose them for you. And then section C is services you can shop for. So these are things that you can decide on your own, your pest inspection, who's going to do that. Are you going to get a survey fee? Is it required? Do you have to do that? You can choose what those things are. They don't usually like to recommend. You can choose your own title company. I'm talking about Virginia, Maryland, DC here. So if you're looking at this in another area, I can't speak for what those rules or options are. So section D is total loan cost. So that's A plus B plus C is here. Then we go to the other side for other costs. So this is E is taxes and other government fees. So there'll be a recording fee and other taxes. Are there any transfer taxes? And remember though, what I do want to mention is this is the loan estimate. So a loan estimate and the final may differ because it may not have the title company or escrow company that you're using for a settlement. So it may not have everything on here. So keep that in mind. Also, F is for your prepaid. So these are things that have to be paid for up front. So these are things that they're going to start what's called an impound account, which is your escrow account. So they need to collect a certain amount to get the account started. So usually they collect 3 to 6 months. They may collect more, but just keep that in mind. And then your interest based on when you're actually purchasing the home. So you'll pay interest based on if you're purchasing at the last day of the month, then you pay say it's 31 days in a month and you close on the 30th, you would pay for 1 month, 1 day of interest, if that makes sense. So in the next section, G, is your initial payment at closing. So these are the things that you have to pay for at closing. And then H is other, so this is other items would be here. And I is other costs, so that's E plus F plus G plus H. That's added here. And then total costs, so that's D, which we had over here, which was the total loan cost plus total other costs. And that brings you to the 8054, which was here on the first sheet. So now let's go back down. So calculating the cash to close. So where does that amount come from? So we bring the $8,054. Closing cost finance, are you doing that? Down payment funds from the borrower is $18,000. There was a deposit, which is an earnest money deposit of $10,000. So the estimated cash to close is $16,054. So that's where it came from. And then the next sheet is this information, who's the lender, who's the loan officer, what's their NMLS ID number. So that's actually their license number, their email address, their phone number. This is comparisons over a certain period of time. How much is this going to cost you over time? And other terms and conditions. What happens if you have a late payment? And then you would have to confirm receipt, that you received it and that you agree to it. So I hope that this was informative. The purpose for this is so you can understand what these documents are. So the first time you see them, it's not a complete surprise. So it's like, oh, well, I've seen that. So you can ask questions ahead of time. If you had questions about a section and you're talking to your loan officer, you can say, well, I saw a video on that. I looked at this document. I just want to kind of verify some things. So you can ask questions. Because when you're in a real estate transaction, everything is fast-paced. So you really don't have time to ask questions about this, ask questions about that. So that's why it's good to prep ahead of time. So I thank you so much for watching. Please subscribe to my video, give this a thumbs up, share it with others, and thanks for watching.